Shares of Verizon's communications are rising today after the company reported fourth quarter earnings, which exceeded expectations. Those gains included new mobile phone and broadband customers. Let's talk about it further with Glen Smith, Chief Investment Officer at GDS Wealth Management. Glen, thanks a lot for joining us. Excuse me. This stock has suffered mightily over the past 5 years. It's down about a third over 5 years. It's essentially drifted sideways over the past year or so. It's an unloved sector in the U.S. and it's an unloved sector in Canada as well. Our big telco stocks have not done well over the past year, to say the least, as well. The factors at play may be very different in each country. There are some very Canada-specific factors that are weighing on our telco companies. What has been the headwind here at Verizon Communications?
By the way, it's an unloved sector in our firm too. This is not necessarily a stock we would recommend for our clients. While they did hit their earnings going forward, they're lowering their guidance, which is why they're struggling. It's just a very tough sector in terms of gaining market share. How do they grow from here? And as you mentioned, they're just treading water. Last 5 years, they're down about 35%. They're down about 7% in the last 52 weeks. And oftentimes, I think people get into these stocks and they're attracted because of the yield. It's yielding 7%. But even if it's yielding 7% and it's down 35% in the last 5 years, you're basically flat in what's been otherwise a great market. I would tread very carefully into this sector. And this is not something I would want to put my money or clients' money in going forward.
And I think I'm hearing that you do not have another name in the U.S. telco sector that you would strongly prefer.
No, sir. There's many other sectors we think that have been performing better and will continue to do better in 2025 and beyond.
Okay. What are some of those sectors?
We like financials are going to do very well. Net interest margins are going to continue to do well with this interest rate environment. We think tech has some capabilities that you want to be very picky. You don't want to just throw all your assets in NVIDIA or an Apple or Google. There's other stocks in there that are much more attractive valuations. I think you want to, instead of looking at it from a macro level, look at a more micro level of what individual positions are going to make sense. That being said, there's definitely better positions out there. Okay,
one you like is CrowdStrike, the cybersecurity specialist.
That's right. CrowdStrike is a stock that we want to get our clients in for over the past 18 months. And unfortunately for CrowdStrike, fortunately for us, we had an opportunity in July of 2024. Had a bit of a hiccup with the Delta situation. And that was an ability for us to add that to our clients' portfolio. CrowdStrike is a stock, one of the leaders, not the biggest, but arguably one of the best in terms of cybersecurity. In years past, cybersecurity was just an issue with very, very large companies. And now that's trickling down to medium and small size companies and being a real something that businesses have to deal with. Because of that, we think cybersecurity is going to be a business that's expanding, and especially CrowdStrike, we think, is going to be one of the leaders going forward, just as it has been in the past.
The big misstep in July of last year, and I'm hearing you're saying that you treated it as a buying opportunity, was a botched software upgrade. Now the market has essentially built back or rebuild all that value that the stock lost in July. You're confident that that was a one-time occurrence and that the company is not accident prone in that way?
Absolutely. We thought that was just a blip in the radar. When it comes to investing, oftentimes investors get focused just on an amazing company. But if you don't get an attractive price to enter that amazing company, at the end of the day, you could lose money. So what we try to do is invest in amazing companies, but use these bit of a hiccups to our advantage for our clients. And the way you do that is just you have your shopping list and wait for something, unfortunately, that will happen in the stock that we think will be a short-term blip in the radar.
Okay, let's go to Walmart, obviously one of the giants of the U.S. retailing sector, the global retailing sector, and a stock that has done extremely well over the past couple of years. And you're not deterred. You think there's more coming at Walmart?
Absolutely. It's funny. Oftentimes when we talk to people about stocks, Walmart's the last one to expect to hear. The reality is last year was up more than Apple. It was up more than Alphabet. It was up almost twice as what technology sector was up. And we think they have room to run. While inflation's been tampered, it's not at the 2% the Fed wants. It's in the high twos, closer to 3% than 2. The reality is if we do have sticky inflation, Walmart's in a unique position where they can pass that inflation on to the consumer. Not all companies have that ability, so we think Walmart's going to continue to grow. Their e-commerce is expanding, and while it's had an amazing year, it's not quite as cheap as it was 12 months ago. We think this is a staple of anybody's portfolio.
Glenn, thank you a great deal for this conversation. Chief Investment Officer at